right there, let's get going on the trading room for the midweek update, January 18th. Joe with you here, getting into earnings season and to our first expiration cycle, right? Is that this week? Boy, I think it is. Well, that was pretty fast. But more importantly, I think this is going to be a very interesting earnings cycle as we've got a pretty interesting market. So let's get going here. I've got my 2 cents. We're going to talk about some good stuff. You guys are going to share some of your trades as well. Take responsibility for the outcome. You guys know the drill. You know the deal. So the markets are showing hesitation at resistance levels so far this week. It's only been 2 days because of the holiday. Not too much movement until recently today, and we'll see how long that goes. We'll go live here in a little bit. The overall downtrend is still in play. We've made mention of this on the weekend class, and I think Corey brought it up again yesterday. We've talked about it a lot. In fact, I'm starting to think the whole world knows because of some of the reaction that I'm seeing today to the downside. Sentiment is still speculative, defensive. One thing I thought was really cool, and I'm glad the boys made mention of it over the weekend, is it's January 1st. It is time to fund your IRA. It is time to put money in your 401k. It is time to do your distribution, right? And so that money has to go somewhere. Saw a lot of speculative purchasing with some bad news on JP Morgan and Wells Fargo and some of those larger banks that didn't do well, but seemed to just see strength in that weakness. And I just think that that's absolute speculative purchasing, putting money to work at the beginning of 2023. We'll see how long it's going to go before the markets just roll over. And I do believe that's kind of what we're seeing. I do believe that's what we've been seeing so far this year, that dull market that we made mention of, that Corey made mention of last week, and this bullish move that Rob is talking about, saying, hey, well, I'm not overall bullish long-term trend, but right now I have to be. I think it's just this speculative defensive positioning when it comes to, hey, it's the beginning of the year, and Darren made great comment on it on Friday, saying that they got to put the money somewhere. Economic data, retail sales, and PPI both showing contraction. That should be a good thing because we want to see slowing down, and we want to see a little bit of easing on the inflation side, but it comes with problems. It comes with job loss. It comes with lower wages. It comes with some of that bad side. So it's this push-pull. I am not sure exactly where this is going to end up at the end of the day. But for now, it looks like we're right about at a teetering point. We'll get there in a second. I'm kind of excited. Going through the trading ideas, I've been doing my scanning as of late. I found some trades that I like. These are also carryovers from last week and the week before. Pulled some from Corey and the weekend trading room, and here we are. Got a couple of bulls. They don't look good, but we'll see them. I'm going to show them to you guys here in a second. I got a sideways that could be a bull, which is a mining stock. It's gold, but there's a slew of bears out there. Now, what I did do, or didn't do, I should say, guys, is I did not take snapshot charts of this. So I will just go ahead and close this, and we'll go live and take a look at these as they stand right now. So the first one, let's go ahead and start with our bulls. This is Macy's. We talked about this last week, and let's see what it's doing right now. It's holding in there, and I think that's kind of why I liked it. You can see that we had a nice move to the upside, thinking it was going to consolidate at this 20, push higher. I said a real quick, easy target here of about 23.5. It's almost there, but it is come down quite a little bit. But in light of what the markets have done, this is just holding in there pretty good. So I do like Macy's to the bull side, or at least keep it on your bull watch list. I don't think it's going to be great today, unless the markets turn around. But it's still on my list. This is AGI. Our next bull, you can see this thing just kind of took off, and it's parked itself above the 10.5 mark, which I'd like to see, and it stayed there. It's pulled back a little bit over the last few days. And I keep forgetting, folks, that we had a pretty good week going into the holiday weekend, and now we are only 2 days into it. So this could get much, much worse, or it could ipso facto turn itself around and we could absorb it. But based on some of the projections and some of the warnings of some of these larger companies, Microsoft laying off 25,000 employees, Amazon laying off people, lots of tech layoffs, lots of worries on numbers. It's probably going to get a little bit more sour, I would imagine. Now that's my opinion. I'm going to totally follow it. But this one's holding in pretty decent. And I do believe it is that flight to safety. It is that gold. Even though you'll see here in a minute, folks, gold is actually down a little bit. But if you take a look at gold's chart, it's just it's been so hot, it's moved so far up. It's just taken a little bit of a hesitation. So we'll see if that's going to continue or not. All right, the next one is Visa. And you might think that's pretty weird, because I do, because it's in the financial sector. But it's holding in. And this is why I like to look at these live. Let me zoom in, is because I take a snapshot. And when I was looking to take a snapshot, this candle was probably half the size. So you can see it's starting to slip. What I'm looking for, let me zoom back out, is just if it can hold above that level there, about the what do you guys want to call that, 218? If it can hang on right around that 218, 217 and a half level, then I think it warrants a stronger trade. That's if the markets are going to consolidate from here or turn back up and move higher. So all of my decisions when it comes to bull, bear, and sideways is going to be derived by what the markets tell me to do. Right? That's how it works. Okay, so not too much for the bears, or excuse me, bulls, but pretty decent charts overall. Good job, guys. I think all of those came from this class. Here is AM. This is, our gold guy here, a miner, and this was a sideways trade. I believe Rob brought this one up. Yes, on the trading room, and he was thinking of something about kind of a high base here. I like it. I like it as well. I'm going to start drawing on this. You can see all the way back to where I kept this line. It's pretty much right at it. And this would be the lower part of the channel. I'm going to focus a little bit more around the 54 mark here, and if it can just stay there and consolidate, I'm okay playing something diagonal. I believe that's what the play was on the weekend. But it'll be interesting to see what happens if the markets do roll over and continue to fall apart, if this is going to be a flight to safety and we do see it move higher, or if it's going to continue to fall apart and this is just a general sell-off in the markets altogether. We'll have to see. Okay, so I'm going to cut before we get to the bear side, because that was the only sideways we had. I want to take a peek at this. And this is something that I don't know a lot of. I think we talk about a lot. Darren was talking about this, saying I haven't seen it this low before, and I apologize, folks. I really can't zoom in on that. Maybe I can on the recording. But look at the gap. It gapped up. I mean, it's still 21.4. It's above 20. We think the VIX is below 20. It's a big deal. This is kind of the scary point. This is what I need to see. We talked about, or I should say Corey talked about yesterday, about the crash, the tech bubble burst, the financial or the real estate bubble burst. The VIX spiked a lot higher than the mid-30s, more high 30s, low 40s. Now, I don't think that's going to happen anytime soon, but this little move to the upside does show a little bit of reluctancy or a little bit of worry early in the year. And could this be because of some Microsoft? The Microsoft announcement was pretty big. You know, if the big giant there is starting to lay off 25,000 plus employees, you know that's going to have a snowball effect across the sector itself, let alone other companies. The banks as well, a couple banks saying that we're projecting lower. So that might be sinking in, and maybe this is our first sign of fear really coming into the markets. But it's just a day. It's just a day. However, last time I saw a gap, this is what happened. So, I'm not going to trade that, but I'm going to be prepared for it. Right? I don't expect this thing to run right back up to 34, although I need to make note that it actually had in the past. All right, so now that we've seen that little gap up in the VIX, knowing that the fear is starting to leak into the markets, let's take a look at some of these bear trades. This is ANET. This came from last week's class, guys. I love it. We talked about this nice rounding bear rally pattern here. The falling 20-day moving average gapped up today. Looked like it was going to try to fight back up to this 120 mark, maybe the 125, and it might be slipping. Now, overall, the pattern is, for you guys that have been nerding out on my videos, and I know some of you have, the candlestick videos I've been doing as of late, is dark cloud cover. I know, it doesn't look like it, because it's very tiny, but it indeed is. It's gapped up and it's traded back down to the mid-range of the previous bull candle. So that could be a reversal signal to the downside. It's definitely on its way. Target back down to the 110 would make the most sense in the shorter term. So that's ANET. Let's move to the next one. This is Lulu. This came from last week's class as well. Might as well start with all three that came from last week. Real quick, folks, if we need to start looking for earnings because we are starting to get into earnings season. This was also a bear. It didn't look like it was going to be one when it came to Tuesday, right? We had this beautiful rollover. We're talking about, oh, look at this, coming right back up to 310 resistance. A little bit of a head fake there yesterday, but look, no real volume on it. Gapped up, coming back down so far today. So it didn't quite reach that 330 mark, but we could see this float lower, maybe hit that falling 20-day moving average. Well, it's falling. It's above it, or the 310. The 310 support that it's set mid-December. So I do like Lulu. I do. And it's kind of in that area of, well, it's consumer cyclical. It's in the retail. I think the consumer cyclical should be kind of the first to get hurt, especially when you see contraction on an economic side. So if we do see jobs being lost, and we are indeed seeing things happen, I imagine people would stop buying stretch pants before they stop buying eggs. That's just my 2 cents. What do I know? Walmart. Okay. Loved Walmart's move today. Beautiful crossover a few days ago. We mentioned it last week as this was coming down. We were talking, it could roll over and maybe hit this 141 level. If it breaks the 140, we could target this back down to 135. And it is rolling over pretty apparently pretty aggressively. It'd be neat if you guys got into this diagonally last week when we talked about it. It might have exceeded maybe your diagonal target, but where it's at now, you might feel like you're chasing it. Let's let this day play out. The VIX did just gap. This could get much worse, or it could just flip right back around and try to recover. So, but I do like Walmart as well. Excuse me. All right. Now let's go through a couple more. And the reason why I wanted to go live is because I only have room for 3 charts when it comes to the PowerPoint presentation. But I've got 8 to look at. So let's take a look at them all. AR, this is in the energy. This is oil and gas. And it's been pretty strong. Oil and gas generally has, but this has not. And I like this pattern. I've liked this pattern for a while. It is neat. It's starting to slope down here. It's actually steepening if you were to go to a more recent. Actually, geez, we'd have to go to here to get that steep of a drop. But I like it. I think it's a really good one. Great suggestion from you guys last week. Came back up, touched the 20-day moving average. Yes, that's the 20-day moving average. Let me erase my pen. There you go. Right at it. Gap down a little bit, rolling over. Easy target at 28. I would be totally fine if you guys want to draw some projections with the channel. Fibonacci snap. You're probably shooting around 26 for a target to the downside. So really nice. Great trade. XLP is one that was on my list during my search over the last couple of weeks. Last week I'd say. I did love this slope here. I did like this resistance up in this point. I just like the sector itself. I like the descending triangle pattern, and it has slipped away from me. I'm trying to work myself into a diagonal spread here. I want to do a 74, 72 shorter term, and maybe roll that to a 71, 70, whatever I can. I'm also debating waiting for this to retrace or how the day finishes. And if it finishes something down to here, then I've got to wait for a little bit of retracement. I'm hoping for a shadow back up to the 74, and then I could just probably play a straight put longer term with a target of about 72. And then a second term target at 70. So this will be more of a slow play. I'm probably looking into March expiration. They get expensive, so just be aware of that. All right. I liked XLP. Let's move on to the next. This is Archer Daniels Midland, right? And Corey talked about this yesterday, and he was 100% right today. Isn't that nice? When somebody comes out and says, this could really roll over. I like the bear rally here. It looks nice. Beautiful crossover. back in the December, the 50-day moving average, 2050-day moving average crossover is what he's talking about. Comes back, almost touches the $90 mark and the 20-day moving average. Nice candlestick pattern, and then boom, today just rolling right over. Great trade. Job, Corey. I still like it. Seriously, folks, a break below that 84, maybe if you want to be a little bit more reserved. I'd be more than fine with a break below 84 and a target of 80. That's probably, and it might bounce and pull back and things like that. So if you guys want to diagonal spread it or longer term vertical, I'm fine with that. Eli Lilly, talked about on the weekend. The idea was for sideways, but there was a bearish element to it, and I'm going to lean more towards the sideways to bearish, so the diagonal. I like this slope here. What's really neat is it did break this support level here. It was a little bit muddled. You can see, boy, let me just zoom in on this. Sorry, guys, let me get closer. It's much easier if we can get it tight. There we go. Now we can get pretty specific. So here's that level right there, and you can see that it actually had a little bit of a pivot there, and then there's a lower pivot. And yes, these have crossed the 20 and the 50. Right about there is where they crossed. But I like the major support here at the 350 level to break. So I'm okay waiting. If you guys want to get in right now, then diagonal it. That's fine. I'm probably going to wait till 350 to see if this VIX goes higher, and we do indeed start to roll over and really take into consideration that longer term slope on the SPY. Then I'd be comfortable with this because Eli Lilly is one of the larger companies, and I think it's got more to give. Easily somewhere in this 325 area. Yeah, somewhere around there. Okay, and then the last one we'll take a look at, because we did look at 8 bears instead of just 3, is Kellogg's. And Darren just knocked this one out of the park on Friday. Said Kellogg's is just falling out of favor here. It doesn't look like it's going to do real well. It might break that 70, and if it does, I've got a target of, I don't know where his target was, maybe 67, 67.5, but boy, it's already there. So it's looking really good. Why am I showing it to you guys? Because it could fall further. Let's wait for consolidation. Let's see what happens at the end of the day. Let's see if it consolidates at 68 or bounces back up and retests 70. A little bit of a breath before another rollover. So these, if you feel like you're missing them the day that we're showing them, you can always keep them on your watch list. It's awesome. Okay. So the Bears are working out. It's not like the first time we've seen that, right? Cool. All right. So let's get into the market analysis here. Go back home. Let's get back to our slideshow. If I can get us back there. So moving back to the market analysis, we'll take a look at it. So the performance so far, we're down. The diamonds, or the Dow itself, the one that has been leading this whole time, is actually showing the biggest loss. The one that has been getting hurt the most, the Qs, is actually showing the least amount of loss. Interesting, right? Oil up another 1.41%. Corey made a pretty good argument that he thinks that oil is not done to the upside yet. Gold slightly down at 0.72, but I think it's just because this has been on such a move to the upside. I can't really chalk it up to anything past that. So that's kind of where we're sitting at. Now that's only 2 days. That's only 2 days of trading. So here's the SPY. Now this has made it really difficult for me on a couple of situations, and I'm going to break down my analysis of it, and then I'm going to ask you guys what you think, and then I'm going to give you my poll. So we've all been seeing this longer term, and I'm going to keep it here zoomed in. Yes, that is a beautiful line. You're welcome. This longer term bearish slope. One thing that has been bothering me for a while is this move. Now let me go ahead and erase this. So you got the whole slope here from these points moving lower. That's obvious. This I was actually okay with as a channel, but when it stopped here, this is really kind of, and it was going to the end of the year, I was already in my own head thinking, oh, I'm going to step off. I'm going to wait. It's consolidating. This isn't my forte. I'm going to wait for 2023 before I start trading. But then I didn't realize that this is actually a support level. So now what do we have here, folks? we've got a gigantic symmetrical triangle. So this symmetrical triangle is really throwing off my top-down approach. I'm super simple. I'm the Maverick way. It's moving averages, sloping, and price where they correlate. This is actually taking a few of those out because of this symmetrical triangle pattern, which is still, if you guys pay attention to, above this overall slope. Now, I've only got a snapshot here of a few months, but if we zoom this out, you go back out, and Corey's drawn it, Rob's drawn it. I won't do it again. This is much, much, much more of a downtrend than one would think. So it's a symmetrical triangle, but a lot more of a downtrend. So that would keep me a little bit more bearish. But it's really been super difficult because I don't want to sit here and short when I'm above a 50 and a 20-day moving average with a pretty good support level at 380. But then again, if the markets fall apart, I don't want to miss that. So what do we do? Well, I'll tell you what I'm going to do, but first of all, you guys need to vote. So that's the SPY. Let's take a look at the diamonds. This one's been the biggest loser over the last couple of days, but take a look at it. It's been a lot higher than the other markets. It's been outperforming the markets. It's the strongest. You can see that it's already retested, slipped a little bit, but it's still got that upslope here. It's still got good support. It's above its averages, but it's starting to fall a little harder. So it could come back to that 330 mark and still be in its kind of a consolidated sideways range of here and here, right? Okay, but it is leading the way for these last couple of days. A lot of people pulling out of that. Here's the Qs. I believe that the beginning of the year, there was a lot of stuff being purchased off the bottom. You guys have seen ARK. You guys have seen Coin. You guys have seen, take a look at BitO. Things that have been beaten down, there's this, okay, let's throw a couple of bucks at it. It might come back up. We'll see if that lasts. All the way back to, what is that, July, right, before August, we're at this support level that it hit here in October twice. Couldn't get its head above. So it's at it again, and it looks like it's about to roll over. Now, that'd be beautiful because the volume starting to drop as it got really close to that. Now, but it is above both the moving averages. So now I'm stuck in that same situation, but this one is more of a descending triangle pattern. Oops, sorry there. Than a symmetrical triangle pattern. So a couple of different looks there. All right, hopefully you guys are thinking about what you're going to say when it comes to your outlook. So let's take a look at the economic reports because they've been exactly what we'd expect when it comes to the contraction of the economic numbers, or I should say in the economy, to slow down this inflation. Retail sales, manufacturing, first of all, big drop, 32.9% retail sales. First time I've noticed a significant slowdown in the consumer, a negative 1.0%. It was expected from previous as well, so it's consistent drop. This was a little hotter than that. We've seen this one come in flat, maybe even slightly higher, and I'm actually for the first time noticing that it is actually starting to slide. The producer price index actually fell. It fell stronger than the CPI did, so keep that in mind. That CPI number was a little bit confusing. It didn't really make too much sense, and that's what we pay on the front end. And a lot of it has to do with these strange situations, like gas has come down substantially. Gas prices have come down substantially since where they were in the summertime, but eggs, for some reason, bird flu or something's going on. So eggs, I don't know if you guys have been out shopping, but I went out to get some eggs, and they'll let you buy 2 dozen at a time, or two boxes of eggs at a time, and they've shot up in price. So if one thing's here, something else is there. So the CPI is a little tough, but the producer price is falling, and it's falling pretty decently. In production also slowing, things like that. What do we got coming up next? We got the jobless claims. I don't know if that whatever Microsoft was going to do, Amazon's going to do. Meta, I think, dumped 10,000 employees last month. So we'll see if that's starting to carry over, or if that has any sort of impact, or if they're smaller companies. You add them all up, we'll see where that goes. Tomorrow, that's going to be a pretty interesting number to watch. And then just some more Fed speak. But Ballard pretty much let everybody know that the Fed has their foot on the gas, and they're seeing some numbers that need to be dealt with. Okay, so the next slide is my outlook. Let's go ahead and get yours. I'm going to launch this poll here. I want to see what you guys are thinking. So go ahead and start to vote. Rob and Darren had Friday. We had the holiday Monday, Tuesday, and Wednesday, 2 days that are sideways, slightly lower, pretty much a lot lower today until we go back live and see if that's bounced. But they had an aspect of plus 1.5. Was it plus 0.5, plus 1.5, something like that? And the idea was shorter term bullish, but longer term that bear trend is still intact, and that's kind of where they're at. Now it's 2 days later, 2 trading days later, and we've done nothing but be bearish. So does that change our outlook? Is that going to change our outlook when it comes to where we were over the weekend? I don't know. We'll see. Okay, pretty quick to 90%. So I love the fact that you guys just went out there and hit some buttons. So let's close that up, and we'll share it. And there we are, folks. 50% at 0, 35, -1, 30% at +1, 10% -2, 5% +2. That's pretty much flat. That's awesome. I mean, look how close we are to a 0. 50%, 30, slight edge to the downside. So let's call that a -0.5, right? Okay, cool. Whoops. Let me hide it first. And I'll show you where I'm at. The exact same. Now, what was tough about this, and you guys saw me draw the lines on the SPY chart, maybe I can just sneak them in here real quick, is I have this that I'm contending with. So, my top-down approach, I've got the above the 20, above the 50, and the slope is correct. However, the averages are not. The 50 is above the 20. So that's my first kind of, the slope's great, but I got to throw that out. This would be more of a yellow, right? But I put a lot on pivot points and price action in my analysis. And when I see this would be such a different story if, let me do this. This is going to be fun. I'm just going to color everywhere. If this whole thing was gone and this was an overall descending triangle pattern with this slope, I could very comfortably be a -2 for the month and, well, actually, no, a -2 for the week and a -1 for the month. And the reason being is because I know that I would hit this area and I could pull right back down to support. Now, another thing is if this was all gone, sorry for the mess here, my moving averages would not have retraced as much as they did. So I know that all of this motion here would still be below the moving averages. Okay, it's not a perfect world. I just wish, and I wish I was a billionaire too, right? No, whatever. So I had this really tough situation to where I couldn't score this. Now, how I can trade this is I truly believe with my 0 here that at least that short-term bull move that we've seen off of this channel breakout is done. I believe it's done. I think we either consolidate or roll lower. So I could be a 0 to -1. Now, why I didn't go to -1 was because of these factors here. That's all. That's all. Cool. Just wanted to explain to you guys how I look at these markets, just so you guys get an idea. So let's get into the sector analysis. And as you would expect, it hasn't really changed much from Friday. Everything's a little bit weaker, but there is stuff that's holding in there. Let's take a look at the strongest and the weakest. So technology, real estate, energy. I think that the technology and real estate are just those speculative interests, or speculative interests where people are buying into them. Consumer defensive, utilities, stuff that has been overextended. We'll take a look at the strongest and the weakest here, but not a whole lot to go off of. So here is tech, and you can see it just had that nice run off of its support level, but we got that bearish move going on today. Not really much to get behind, thinking, oh, this is the strongest sector. I really want to be in this for the rest of 2023. Well, maybe I will if it breaks above this level or if it starts to break above that level. But where it's at right now, it's just enjoying an oversold bounce. In the same direction, the consumer staples that had a pretty good recovery off of the bottom and a lot of speculation is starting to channel down. And it's one of mine that I like. It's on my watch list. It's something that I would actually like to trade. I'd like for this to break down. You guys heard me talk about it. But right now it's just a little bit extended. I want to make sure that today's just not a fluke. It's not just something that Fed comes out, or one of the Fed guys comes out and just freaks the market out, saying they got to be aggressive. I want to see a little bit more conviction when it comes to selling. I want to see volume. I want to see that VIX stay at that gap and even move higher. And then I'd be more than happy to get into a bear trade on this. All right, let's get to the conclusion. The market, oh, so I love this. I didn't change much of this from last week. So our markets are moving to the upper area of the range, which it is, still below previous consolidation levels, which it is now rolling over. So I didn't really have to change much here. We are still well short of a bullish trend, but floating higher nonetheless. That higher might be done. I could have changed that because it looks like it's rolling over today. Day's not over yet. Week's not over yet. We'll see. Sentiment is light. It's more of that defensive speculation that I'm seeing. Earnings season is on deck. I left that, but I added this. Pessimistic projections. Lots of companies saying they're going to lay off. Lots of companies expecting a slowdown. Lots of companies warning. So we'll see how that goes. And we got a whole slew coming out, folks, if you guys just want to sit back and watch. I'll show you when we get live here. CPI, retail sales, PPI, manufacturing, everything's going the right direction as far as what the Fed sees. However, the markets were expecting to be a lot further ahead than the Fed thinks. And that we talked about that last week, saying that the Fed was seeing it at over 5%, and the markets are trading like it's going to be about 4 or less, 4.5 or less. Well, Fed speak comes out today with Ballard making a suggestion, and it's not just him. There's a couple out there that are saying, no, our target rate's above 5 right now. We might have to keep our feet on the gas. So that's like it immediately turned the markets. So we'll see where we end up. Okay, there is the midweek. Let's go look at some trades. Let's go look at the trades and see where we're at overall. So still sliding. Still sliding, and it was as obvious as it gets. I mean, as soon as we got a little bit of worry or bad news, all three of these markets just went south. Okay, so let me move on to my cursor. Yes, I told you I was going to show you this. This is fun for you guys that are new to this class and rolling through. It's now you guys are not new. I've got my group of midweek people, and you're all there. This is a nice place to take a look at. Here is your news for things that you might have missed. This is Microsoft saying they're going to lay off jobs. Tesla's always in the news. United Airlines actually did pretty well. Things of that nature. But what I go to is this earnings release. It's not all of them, but it's a majority of them. And what's really cool, since I'll give you my 2 cents on how I like to scan, you want a real good shortcut? Okay, this is January 17th after market, and this is January 18th before market. That's what A and B mean. So I know that these numbers are out. Let's see how they did. Just roll the cursor over. Oh, that's a gap up. Huge volume on that. Didn't go anywhere. Here's United Airlines. They did really well. Came back and closed all the way back down. Interesting. Here's a PNFP. Gap down, traded lower. HWC, gap down, traded lower. So on and so forth. See what I'm doing here? And it's cool because now I can just get a gauge of, geez, Louise. This is all bad. Most of these are actually moving to the downside. Let's take a look at Schwab. Charles Schwab, gap down. But it's still above its support level. You guys can see that. PLD looks like it did pretty good. PNC, way big gap down. Okay, we can do this all day long. So that's kind of a quick shortcut. Other than that, you could go through and find your favorites. Your Schlumberger, Microsoft, Johnson & Johnson. We can make lists and be ready for them for the rest of the week. All right, that's kind of how I also like to start my scanning process. So let's go out and see what you guys are looking at. Enough of me. Robert's looking at EOV, bear target of 470. Okay, let's get into this. Nice. Yep, boy, it's almost there, unfortunately, isn't it? But nice rollover. Yep, like it. I like it. Shorter term of the 470, if you could diagonalize that, that'd be cool. If you guys think that you want to bite something off larger, this is a large, volatile stock, good dollar amount. Play something between like the 475, 465. A vertical spread on that. Play something kind of cool. Let me write it down. Thank you. All right. Thanks for that, Robert. Okay. Somebody's early to the party. Robert is, oh, different Robert, by the way. I'm early to the party there, but BA. Let's see how early you are to the party here, Robert. Started to base a bit. Falling markets. BA is a shining star. Let's see, breakout above 216.64. Zoom in on this. For those who need a bull, why not trigger? Okay, yeah. So it's Boeing, and it has been holding in. And he said 216 and change. Yes, I get it. Yeah, they're probably the high there. 216.64. Sure. I'm okay. That's great, especially if it can hang on. I mean, it'd be nice to have something. This is industrial aerospace. We had a few. Was it Archer Daniels that kind of slid? They didn't. I thought they were holding in pretty good, and then they just fell apart over a little bit. So let me scroll down here. January 25th. Okay. Before market. Keep an eye on that. If that holds in, Robert, that might be something like a little bit of a safety net to the bull side. I'll write it down. Thanks. All right. AMAT. Okay, we got a 115 realistic in next 2 weeks. Let me see if it is. That was a question, by the way, folks. Is 115 realistic in the next 2 weeks? Yes. If Applied Materials can hang on, absolutely. It's a good move to the upside, and if it can consolidate and stay, look at this, right above that resistance, 115 where it gapped up and came back down, sure, it could shoot back up there. In the next 2 weeks, boy, I wish I knew that. I wish I knew that, because then we'd all be buying this for the next 2 weeks. Double check its earnings. I usually check like earningswhisper.com. You can just Google any stock that you're looking at if Finviz doesn't give you the exact number or date. But yeah, let's put it on. I'll put it on the bull side. It's strange because it's a tech, right? AMAT's been around for a long time. I traded AMAT Applied Materials during the .com bubble expansion back in 2000. So they've been around. Doesn't mean they can't get hurt, but it's holding in really good. Really nice. Thanks. All right, Joel. ABC. What do we got here? Got ourselves a trade. January, 162.5, 160 bear put spread. I kind of like where this is going already. Yes, I like it. Bear put spread. A little aggressive. I'm totally fine with a targeted, aggressive spread on that. That's awesome. January 27th. Sorry, guys. I don't think I said that all the way. Which is next week? Week and a half. Sure. I like it. Let me put that down as a bear. Not going for much. Not trying to shoot for $10 there. Just shooting for $250, right? Easy peasy. Slightly out of the money. Gonna have a good risk reward on that, Joel. Thanks, man. All right, Sebastian. I'm glad you got your technical difficulties figured out. Okay, you can hear me now. All right, IYF 7877 bear put chicken trade. I love it. Yeah, let me see this here. Zoom in. 7877. Yep. Okay. Now, guys, folks, everyone, these aggressively targeted vertical spreads, I know that we've only talked about two, are excellent in a situation to where you believe the markets are just going to fall. If we continue down today, gap down tomorrow, continue down, you're going to be very happy, Joel and Sebastian, about the targeted aggressive, but not trying to bite off too much. His target's 77, folks, right there. Right, this thing, if it falls, I mean, it's got its moving averages. 76 is an area, 74 is an area, especially if you're doing an ETF that might just get dumped, especially if this fear can stay. So I'm okay with that. It's a great way to take advantage of something that you feel like you're chasing. Vertical spreads limit your total exposure, and you can get a pretty good risk reward when it comes to targeted. So thanks, guys. SPY trade. Let's take a look at it. Oh, by the way, let me write down IYF. It almost seems like a counter trend trade, doesn't it? But or a retracement. I don't know. It looks good. Let's take a look at the SPY trade here. I lost my place. Sorry, folks. Let me go find it. Right there, Dan. Hey, Dan. Oh, Dan, by the way, I did like the that trade on Wing. It was a nice piercing line candlestick pattern. What do we got on this? Yeah, 406. Oh, okay, let me draw some lines. I'm not going to remember those. Okay, 406, a little bit above 410 there. 394 is going to be just about where it's at, we'll call it. And a 382, just about there. Doing a butterfly, $2, 272 with a February expiration. Not bad. Okay, expecting maybe this. Right? I get it. Makes total sense. That actually kind of supports my symmetrical triangle pattern outlook, or even a range bound, 380, 400. He's expecting a little bit right in that area. Okay, I'll put down SPY as a sideways trade. Wouldn't that be kind of fun? Longer term, by the way, folks. He's going out to February. So your outlook, Dan, is basically we're going to push, pull, and go nowhere. I get it. I agree. I mean, it makes total sense. Cool. All right. HUN. What do we got here for Jason? 3034. Call spread. Oop. Zoomed in too much. I want to get your target in there. Okay. Big one. What's your expiration on that, Jason? Probably, hopefully, a little longer. I do like how this gapped up. It's got a good level here at 30. Maybe I should zoom out because you probably have a target further out. Let me do this. Yeah. Okay, you're probably shooting for back up where it was in the end of the summer there, or midsummer. Makes sense. Okay. High base. February. Good, Jason. All right, longer term. Expect this thing to consolidate and then boom, shoot back up. It did drop hard. And even if it doesn't shoot back up, that's fine. He's got till February to play it. Okay. Okay. Huntsman Corporation, Basic Chemicals. We've seen those go two different ways. I mean, the one that trying to figure out what this one was going to do. This was on my bear watch for a while, and boom, just took right off. Schlumberger. I still like it. I just think it's overextended. But similar to HUN. Yeah, oh, there you go, Dan. This is Wing. This is what we are just talking about. Let's take a look at it, because it is kind of cool. This had a piercing line pattern. Is that the piercing line? Yes, right. This one. Yeah. So confirmation needs to be above that if you guys want to get. I can zoom in a little bit more, but if not, watch the video I just posted. But I would like to see it above that and a little higher, maybe above that 50-day moving average. But yeah, this definitely has the potential to turn around and break down if this is indeed a higher pivot low, right? Because it's right at this area, and if it could get above that 150 mark and float a little bit, maybe 152.5, which is where that moving average is. Let me get rid of my lines here and zoom in a little bit more so you guys can see. But it hasn't yet to confirm. It needs to confirm above this candle's high. And then it would be a piercing line confirmation reversal signal. But let's write it down. Let's keep it on the bull watch. Now you're making me hungry. Wingstop. Sounds good. Oh, that's a fun side note, Sebastian. Do a virtual summit, a Zoom summit. I do miss those summits. It's fun to see everybody. I'll run it by the boys, see what's up. Absolutely. Yeah, it'd be a great way to meet people. I'll run it by, see what happens. I mean, hey, Zoom's there for a reason, right? I don't know how you could put that many people on. Put 60 people, 70 people on Zoom at once. That would be fun. Oh, no. I'll see what's up. I'll run it by. ADT, long put. Robbie, I like it. Just short and sweet. It's, Okay, let me keep reading. Long put, exact expiration. The 10 strike, he's deep in the money. Okay, he's just waiting for the rollover. It's early, but I mean I know where you're going with this because it is a nice descending triangle pattern. I just hate that it's above its averages. But man, if he's going to hit the 10 and expect a revision to the 9, I can totally get it. I could get it. I get it. Okay. Okay. Sure. And what's cool about that, he's got a February put. He just take it as soon as it reaches the target. You can protect it. So if you want to get as aggressive as you want, I mean that's fine. I'd like to see something a little bit more bearish, something with more of a downtrend or at least breaking support levels. Like I'm going to put this down, but I mean my entry would be at 9, a break below 9. I'll put it down as the bear though. I see what you're doing with it. That's fine. What is the date today? The 18th. I just want to make sure I don't forget where this list came from. Okay. Oh, Sebastian. Elliott Wave. That's not my forte, but I'll give it a stab. His idea was, or the question was, do you agree with the Elliott Wave for the markets could rally as high as August, September highs before rolling over? Let me just do the SPY for that. I don't think so, but it's not the Elliott Wave theory. It's just there's nothing there. So April, May, June, July, August. So here's August highs. I could see us maybe getting to November, December's highs as a head fake. But when it comes back up to this, I think we're just in a different situation. So Elliott Wave says yes, it should. ABC itself back up there, it could. And the one thing that has me nervous is this is one of the pivots. So if we're starting here, yeah, ABC wouldn't take too long to actually get to this point. However, I'm going to put more of the fundamental into it. This is a much more optimistic move to the upside. This is a lot more pessimistic, knowing that we have the gas down. We are going to get into an economic slowdown. I mean, these things are fact. So, which one rules out? Yeah, there is a definite argument of reaching this level because of this pivot point. However, I'm just going to do something. I'm a shorter term guy, obviously, but let me move this forward because I believe that this, and actually Corey made mention of it too, this is a gap and trap, folks. Move, comes back, we're up. I mean, understand this candle opened at 410. This candle opened at 410. This should be off to the races. We should have tested that August or high after this move, and it did not work. It fell apart. So I imagine this 410 could be revisited, maybe in a very similar situation. Keep an eye on that VIX because today's VIX is a little bit of, it's the first sign that I've seen in a long time where these markets are actually a little apprehensive, a little scared. I mean, how long has it been, folks, since you've actually seen that VIX even do anything? Let's pull it up one more time. But it's a very good conversation piece, Sebastian. But my 2 cents is I don't think so. I mean, it's been a long time since we've seen a pulse like that. So, good question. Thanks for that. All right, let's take a look at a couple more. Let's go to CCL here for Robbie. I'm going to zoom in on this. Carnival Cruise Line, right? Yep, okay. Ooh, bearish engulfing pattern, but a pretty good move to the upside. 10-12 bull call spread. Sure. A little bit of a hesitation here, but boy, this thing just went gangbusters, didn't it? And let's see, 10-12, you're good there. Even if it pulls back, you got a good support at 10. And you said, what's the expiration on that? Bull call spread. Oh, February 3rd, I believe. Good. I'm fine with that. Longer term. We'll see. There's a lot of expectations for travel. A lot of expectations for people going back out and doing stuff. I was trying to get to Las Vegas Sands, folks. That thing just took off. But if we do hit a slow economy and people do lose their jobs, then maybe all of these roll right back over. Yeesh, we'll see. Okay, let's take a look at one more, then I'll cut you guys loose. All right. Try to keep these around 30 to 45 minutes. This is a little longer though because longer class, but I'm excited because there's a lot to look at out here. I'm excited. So this is ADT again. I believe it. Yeah, ADT. It was a follow-up. Well, 1260 was the target. Thank you. Oh no, 850 target on ADT. Thank you. So for you guys that were looking at that, we did put that down on the bear. So he is shooting down here, right? I could seriously be fine there because you have that 10 put, remember, right? So you want to take half there and then another half down there. But you do have plenty of time on that. Thanks, Robbie. And then on Carnival Cruise, I know that sometimes I don't get all the way down to the what I'm supposed to read. So thank you guys for being patient. One we just looked at there, what would he got a target at the upside? Oh, 1260. Okay. So he's thinking it's going to exceed the 12 mark above his target because, right, you had the vertical spread on that one. Okay. Excellent. Thanks. Just a little follow-up on those trades. Appreciate it, guys. That actually helps. All right, let me write these in, and then let's go see what these markets. Boy, I don't know, folks. Maybe the first time we saw a chink in the armor since this optimistic end to the year and this consolidation. This is a pretty good test. The bulls are bears right here. We'll see how long that goes. Oh, let me find my list. Okay, there it is. All right, so plenty to look at. It was crazy because we have a lot of bulls too. I like it. Okay, Carnival Cruise Lines. The SPY, I'm going to put it on the neutral, but you guys understand that that was a pretty slow play. That was into February, and so we could just keep bringing it up. I mean, we look at it every week. So if you guys want to write that down and remember, I'd be more than happy to follow it along with you. IYF and ADT. And that's it. 4 bears. I thought we got more bulls than bears just by one, but interesting. All right. All right, guys, here is our list. And, yeah, I think I've got everything. So cool. Off and running. Pretty interesting that we actually came up there and hit that resistance that we've been talking about for a long time, and I imagine all the markets know it. Now, it did come on a little bit of hawkish news from this Fed speak today. We don't really have much economic-wise for the rest of the week. You guys saw that, right? I'm interested to see what the unemployment number is, or I should say the jobless claims is, but past that, I think that's it for the rest of the week. It's just going to be Fed talk, but the markets rolled over pretty hard, pretty fast. We'll see where we end up on the rest of the week. Thanks so much for your participation, guys. As always, we'll talk to you next time. Bye, folks.